Hello, my name is Nya-Teach-E, your teacher. Let's look at the profit and loss account. The profit and loss account. This financial statement is prepared to determine the overall profitability of a business. So that means what this account will reveal is either a net profit or a net loss. When you draw this account, you will be able to compare the revenues of the business against the expenses. What are revenues? Revenues are incomes that the business is getting, and then expenses are the costs incurred to run the business. Most times they are looked at as a bad thing, but the truth is that when you incur costs in a business, you look forward to getting positive results. You're getting profit. That's why when you record revenues on the profit and loss account, revenues are on the credit side because you're earning them. And then expenses are on the debit side. You're using money or assets are going out in order to bring in profit. Items that may appear in this account include carriage out. Carriage out. We said that this is the cost of transporting sales to the customer. The carriage out is an expense. We record it under the debit side. Discount received. This is a discount given to a business person by his or her supplier. This is a revenue to the business recorded under the credit side. Discount allowed. This is a discount that a business person gives their customer. Business person gives their customer. This is an expense which is recorded in the debit side. You will also find that there are other incomes as you draw up this account, such as rent income, commissions, agency fees, and other gains from the sale of fixed assets in the business. This is the format of the profit and loss account. The name of the business, the name of the financial account, which is profit and loss account, then the date on which you are drawing this statement. The left side is the debit side, the right side is the credit side, and then you will list your expenses on the debit side and the revenues on the credit side. Let's quickly look at one example and learn how you can draw the profit and loss account. The question is as follows. The following balances were extracted from the books of Nairobi traders for the period ended 31st December 2022. And then you're given the expenses and revenues that you're going to input in that account. There is gross profit given as 92,000. Rent is 8,000, electricity 3,500, advertising 8,500, carriage outwards, cost of transporting sales 1,900, salaries 6,300, discount received 10,500. What is required of you? To prepare a profit and loss account for Nairobi traders for the year ended 31st December 2022. Let's draw. Looks like this. T format. This is the left side is the debit side, the right side is the credit side. The name of the business is Nairobi Traders. The name of the statement is profit and loss account. The date at which we are drawing this is for the year ended 31st December 2022. Gross profit. Gross profit is a revenue to the business. It's what the business has gained, the business has earned. So we will list it under the credit side, gross profit. Carried down. It's from a previous period of accounting, so we bring it down. 92,000. Rent, since it's not been labeled as rent income, we will take it as an expense. It will be on the debit side. Rent, 8,000. Electricity, 3,500. Advertising is also an expense. We are advertising so that we make more sales, which translates into money, 8,500. We have carriage outwards, also an expense. Carriage outwards. We're using our money to transport sales to the customer, 1,900. Salaries, also an expense. Paying really good people to work in our business so that we make really good income. Salaries, 6,300. Then discount received. This is money that the business has gained from somewhere. Discount received will be you will input it on the credit side. Discount received, 10,500. Now let's add. Total will be there and there and there. $8,000 plus 3,500 plus 8,500 plus 1,900 plus 6,300. That will give you our total is 28,200. We can have it here, the side first, 28,200. Let's total what we have on the credit side. 92,000 plus 10,500 gives you 102,500. We'll use that as our total, 102,500. You remember the 28,200 that we set aside? Subtract that. 28,200 gives you 74,300. What does this account give us? Net profit. So net profit carried down is 74,300. We have found our net profit to be 74,300. This is it, a total of 102,500. When you subtract the total of 28,200 from these expenses, subtract that from what you got from the credit side, you get the net profit to be 74,300, and you're done with your calculations.